Hello, good evening, and welcome to today's very interesting episode. In this episode, I will be explaining you takeaway from the CXO meet of a very popular company business. But before that, let me give a disclaimer that I do not have any buy, sell, hold recommendation with this particular video. The stock which I am going to mention in this video is not a buy, sell, hold recommendation from my end. If you have any interest to take any position or to take up the stock for trading, then must be your own call or check with your registered advisor. I do not hold any recommendation with this particular video. I just wanted to share the knowledge, what I have achieved or what was my takeaway from this particular CXO. So the name of the company is Sheila Foam Limited, SFL, and it came into limelight just because of it took over a very popular company called Carlon, the mattresses company. So afterwards, the stock very much came into limelight. And true that the stock is a laggard, has not been performing for quite some time, almost 1 year or maybe little more than a year. The stock is absolutely laggard. It's not at all performing, underperforming the market rather. So it may be a concern for many of the investors, and that's why I thought of like sharing my experience from the CXO meet. Whatever the management has said, I am going to share with you. So before taking you through the to the financials and numbers, let me tell you a few very interesting, important pointers here. Basically, this company came into limelight, as I said, like when it took on, when it took over Carlon during October 2023, last year, October, right? So Carlon, we know that it's a mattresses company, and Sheila Foam, with its very well-known mattresses brand, Sleep Well, is already there in the market, and like Sleep Well dominates the North India and western part of the country, when Carlon is a major player in the eastern part and southern part of the country. And Carlon was had lots of trouble in its operation, and finally Sheila Foam took over the company in October 2023. And like many of the investors, analysts anticipated that this merger, this takeover is going to play out positively for both of the companies. And as Sheila Foam is a listed player, Carlon is not. So this merger will augur well for Sheila Foam as well. And like this merger, I would say, like anticipation of the market was the synergy will play out. So that was the backdrop. Now what happened? I said like after takeover, almost 1 year, maybe little more than 1 year, the stock is completely underperformer, has not been performing at all. Rather, it has slipped 20-30%, and many investors got trapped in this particular investment. So what's wrong in this particular market? Now let me discuss the takeaway from the management, means whatever the management has seen. See, this merger, this integration has front end, back end, mid end, like mid end, mids. It's not mid end. Sorry, wrong terminology. The mid side of this integration, the back end and the front end. The back end is basically the factory integration. Back end integration refers to factory integration, production, all those stuff. So the management said, sitting in December 2024, management said 95% of this integration process is done. So post takeover, post this takeover, the consolidated Sheela Foam Limited had 20 facilities. Now they said they have closed down 3 facilities and 1 facility is in the process of closing down. Why they are closing down these facilities? Because these facilities are no more uh, productive, or let's say it's overlapping. Rather, it's overlapping. So it's drainage of wealth. That's why they have decided to shut down these like shut down those factories. And what will happen with this with these factories? So those closed factories. So that was my question. So management said they are basically like they will sell off their assets over there, and the machines which are obsolete will be sold off. So now, but Sheela Foam Limited, whatever the distribution model was there, that was very much valid. Carlon's distribution network was not at all that uh, strong. So Sheela Foam has going to play the superior role in distribution and all. So Sheela Foam said that they are retaining most of its distributors, and the Carlon brand integration, matlab the Carlon, the distribution of Carlon was not that strong. So this integration will mitigate the say weakness. Now, let me tell you, 44%, as per FY24, 44% of the top line of the company comes from the mattress business, and rest is polyurethane foams. Now, foams are they have distinguished it as a technical foam and comfort foam. So, comfort foam is nothing but which goes into cushioning in furnitures, in sofa, in chairs. So, those are all comfort foams. And the foam which goes into those technical things means soundproofing. Soundproofing technology, air conditioning requires some foam, auto requires some foam. Those foams are basically technical foams. So these like 44% of the top line in FY24 was mattresses, and rest 56% was coming from pure foam, PU, whether it's technical and comfort foam together contributed 54% of the top line in FY24. But now they are emphasizing increasing the share of mattresses in the top line. And in H1 FY25, matlab just ended quarter 2, their share, matlab in H2, the share of mattresses have already come up to 50% of the top line. And their strategy is to further emphasize, like increase it. So why they have adopted this strategy, that we will understand like gradually we will understand why the Australia business and Spain business. This is India business is basically Carlon and SFL, the core business Sleepwell, and Australia and Spain is basically polyurethane foam business. So I'm coming to that later. So that business Australia had some troubles, of which I will be discussing. So, and that's why to mitigate the volatility, raw material price volatility over that part, the company has decided to focus more into mattresses, or let's say to emphasize more into mattresses to increase its contribution to the top line. So, okay. So a few pointers. The company has replaced imported foams in airlines. In Vande Bharat, Indian Railway has called for some fire retardant foam. So this company is the first mover. They manufactured that particular product for the first time in the country, that foam which is fire retardant. But unfortunately, that product has becomes a commodity. It's has been commoditized, so lots of players have started manufacturing the same, and that's why Sheila Foam dropped that venture. They didn't have any benefit, any revenue out of it, but yes, true that they were the first one who manufactured that particular that product, fire retardant foam, uh, in-house. So uh, the Carlon takeover. Currently, in Q1 FY25, Carlon's revenue contribution was around 100 CM. And in Q2, they again contributed around another 100 CM. So the target means the management said at the optimal capacity utilization, Carlon can add 1,000 crore of revenue. So there is, but it will reflect over the period of time because of the total integration process. And as far as synergy is concerned, management has said 250 crore of synergy benefit from this merger. So 100 CR they have already derived in H1 FY25, and they are anticipating full 250 crore, means another 150 crore in H2 FY25. So full 250 crore will be synergy will be reflecting into the in FY25. Okay. So management said regarding the capacity utilization and like, is there any chance of further increasing its capacities and all? So management said that they have enough capacity, enough space at this point in time. Not enough capacity. They said they have enough space in their existing sites. So in case any further enhancement of capacities are required, they can do it in their existing plants. So based on like whatever the current capacity utilizations are there, that is based on certain hours of running, especially in the polyurethane section. So based on certain 6 to 8 hours running, they is the current capacity utilization is based on that few hours of running only. So they can increase number of shifts, and afterwards, like when it will be optimal, or let's say at full, running in full, then they can very well increase their capacity in the existing site without making any without venturing out for any further greenfield project. So what does it imply? So it implies that they do not have any major capex ahead, at least at this point in time. Okay. Now there's some debt obviously in their books. So the question is, what is the strategy of the company to mitigate to reduce the debt? Now, in this regard, let me tell you, it's okay. So, basically there are some cash. Okay, so some cash is there in hand with the company. So this cash, I think it's significant. I will show you this little bit later, like around 2,600 of cash is lying in the with the company. No, so basically, the debt, whatever the debt is there, the interest cost on the debt is around 8%, and the current yield, on their investment, because in recent past we know that last 1 year, the government securities uh, yield has gone up. So currently they are saying their investment yield is 12%. So as their investment yield is significantly higher than the cost of the debt, so it's there's a significant 4% spread over their cost. That's why they prefer to hold that cash in their books rather than paying off debts. But over the period of time, obviously, they will reduce the um, debt which the management indicated earlier. Okay. So, along with that, the management said India business generated 35% ROCE earlier. Now it is muted and expecting the same level of ROCE can be achieved back once again. So, another one important factor is the company took over Farling, we all know, like along with this uh, Carlon takeover. So Farlenco, we know that Farlenco became an associate of the company, not a subsidiary. So management said Farlenco's PBT became positive in February 23. And currently, Farlenco's run rate is 200 to 250 crore. That is top line I'm referring, 200 to 250 crore of top line for Farlenco. The management aims to double its revenue in next 2 years. This is the committee of the management. But please note, Farlenco is not an associate of the company, so it has nothing to do in the consolidation. So top line to 200 crore, 2000 crore doesn't matter for the company. What matters, that is the bottom line, right? So, so they have increased their stake. I don't recall, I'm unable to recall at this point in time what is the latest stake of the company. So not making any comment over there. But yes, if it crosses, in case if it crosses above 50%, then its top line will be an important factor in consideration. So now let me take you to my screen to show you its numbers and all, and regarding their business. So these are the numbers. I'm discussing the numbers later, but before that, what I wanted to show you, that is the presentation of uh, this company, Sheila Formula. So my motive is to show you, these are the brands, Sleep Well, Carlon, Farling, which I was referring to. Another one, couple of factors, what management did mention in today's CXO meet as well, that the company has launched two products, all of us know. One is Aram, another one is Taran. And management said, like earlier also, like they got very good response from Taran. So Aram, I'm not very sure about it, but I guess that Aram is also doing well. So Sleepwell, this the mass product, like both of these are mass products. So the Taran is basically under the Sleepwell brand, and the other one that is the Aram, that is under Cardon. Okay, so looking to this is the India business. Okay. India business is, I said, this is basically the SFM, that is the Sleepwell mattresses, the Kurlon, and Furlington. This is the India business. And what's about the international business? I'm coming to numbers later. What's about the international business? So, okay. So, okay. So this growth and numbers, I'm coming to that later. So what is the international business? There are two destinations, one is Australia, another one is Spain. Now in Australia, what the company did, let me tell you, this is visualized, like this is visible in front of you. So in we can see that in H1 FY24, top line was 204 crore. And in H1 FY25, top line is 202 crore. So it's almost matching. What happened in between during Q1 FY25 previous quarter, like there was a dip. There was dip in the top line. So that period was not very good. In between 2-3 quarters was not good for Australia. So what happened basically, there was some disruption, and you can see gross margin is almost maintained a little bit here and there, 48%, 48.7%, 48.3%, and 48.7%. Rather little 400 basis point improvement is, no, sorry, not 400 basis point, zero point 0.4 basis point improvement in the gross margin. So it's nothing, it's flat, we can say. And but EBITDA margin, have a look at it. EBITDA margin, which used to be 7.7% in Q2 FY24, has come down around 2%, 2.6% in Q1 FY25, and 2.1% in Q2 FY25. And that actually creates the concern. So in H1 FY24, your EBITDA margin was 6.8%. I'm referring Australia business. And in H1 FY25, it is 2.4%. Now the question is, why this drop in the margin? Why margin got squeezed? Now there was a big disruption in the supply chain of the raw material. And raw materials are very much commoditized business and very much commoditized product. And there is a very, big fluctuation in this input cost impacted the, like impacts the performance quite often. So the management, what is the management strategy to mitigate that? So what I was referring earlier, that management strategy is to focus more into Sleepwell and Carlon brands, mattresses, rather than the polyurethane and technical foam, comfort foam business. So I'm not saying they are focusing out or wanted to focus out, not at all. The management said the contribution from Carlon and SFL, means Sleepwell, will go up. That is their strategy to mitigate the risk of volatility or price volatility impacting margin. So that risk will be minimized. With that, what will happen? In the consolidated business, you will get relief in terms of volatility. So margin is likely to be stable as the contribution from the mattresses brands will go up. So next is Spain business. Spain business is almost not very different. It's almost stable. And this is the IT, small IT business. I'm not getting into that. So it has hardly mattered. So I'm not showing this in the presentation. Let me take you into my Excel. It's a 2,900 crore top line company, almost 2,982 crore, means in FY24, the top line was 2,982 crore. So it's almost 3,000 crore company, we can say, with a very marginal increment at the top line, 4% only in FY24 over FY23. So raw material consumption cost has gradually gone down from FY22 to FY22. Gross margin has improved. These are the consolidated numbers, okay? And as far as EBITDA margin is concerned, that is stable at 10% for the last couple of years in FY23 and FY20. But when you will have a look at the standalone business, then you will find the top line was down little bit, 6.9% down, almost 7% down. 1879 is the top line, 1880, and here it was 2982. So if we compute the contribution of the this standalone business, so it's 63%, right? So I hope this is visible what I have done. So this is we are 63%, very important for us. Okay. So again, let's come back to the standalone numbers. So standalone gross margin is that has also gone up uh, from 39%, 37% FY23 to 40%. So it has in last couple of years, it is the best margin, gross margin I'm referring. EBITDA margin is stable around 11% at the standalone level. And as far as standalone quarterly numbers are concerned, uh, there you can see the degrowth, or let's say the weakness. Make it big. So this is the top line growth, regrowth. So whatever the 5, 6 quarters, 1, 2, 3, 4, 5 quarters, 6 quarters is visible. Among that, past 5 quarters were weak. Top line degrowth has been witnessed for last 5 quarters, but this quarter, September quarter, was the best quarter among many months. So this is the best number visible in last visible time period from since June 2022 to September 2024. This is the best quarter ever. Ever means whatever is visible. Uh, like I'm not very sure whether it was better in the previous period, but yes. So 600 crore is the standalone quarterly numbers, and as far as lastly we have discussed, like in this is the India business is the India business. Out of this 600 crore, 100 crore is Carlon alone, and rest is basically other businesses. So in this business, EBITDA margin has also improved to 12% after a muted 3, 4 quarters. Last quarter it was 9%. March 24 was 10%. So this is 12%. Looks better. So this is the standalone level, and as far as quarterly consolidated numbers are concerned, that is there are growth for last 3 quarters, 16%, 26%, and 33% respectively in last 3 consecutive quarters. So this is the growth I'm referring, where EBITDA margin was volatile enough, and no, sorry, EBITDA margin is okay. It's ranging between 9 to 11%. Only last quarter was exceptionally low, 7%. Apart from that, it ranges between 9 to 11%. So overall, this was the performance. So this implies that some sort of like whatever is the contribution, Carlon's contribution is minimal, but there is an opportunity to add another 1,000 crore from Carlon uh, in the full year basis. So current full year revenue, I said almost 3,000 crore. Another 1,000 crore of addition is possible over the period of time. but the core business itself is also growing, and that growth is very significant. And so let me show you. So let me move. Yes, so this is something I wanted to show you. Just a moment. Let me show you the just a moment. Now it will be better visible. So what I got today, that is mattresses volume growth in September 24 quarter was 19%. Sleepwell volume growth was 14%, means overall mattresses they say that is 19%. Sleepwell volume growth was 40%. Carlon's volume growth year on year, all these are year on year basis, in 26%. Technical foam volume growth is 18%. Furniture foam volume growth is 10%. And this is the IT arm stack. So this is 33%. So these are the growth factors for the company. And overall mattress, like which comprises of, I said, the Carlon, SFL, and means together the India business, that also recorded significant 34% growth year on year basis, along with the backed by the volume growth. So these are all good signs, but don't take it as a recommendation or buy sell hold recommendation for me, for anyone. And whatever the current scenario is showing, that there are like it was languishing, but now it is getting traction from various ends, various other businesses, and the synergy is also playing out. There is a chance that it may further come up, it may further revive, but timing is very difficult because lots of investors also got trapped uh, in this game of timing. So for 1 year, investors are trapped. So I thought of like having a look, having giving all of you an outlook of this particular company. So that's it in this particular video. And please don't forget to subscribe my channel for getting this type of very interesting and important updates from mine. So let's meet you once again in the next video. Thank you so much.